So today we're diving into the latest scoop from the Federal Reserve Bank of New York. The title of this bombshell: New York Fed Survey. U.S. consumers prepare for higher inflation and surging home prices. Sounds intense, right? Well, buckle up. This is going to be juicier than a steak at a five-star restaurant. Okay, let's break it down. First up, let's talk about everyone's favorite villain: inflation.
Inflation. What a stupid son of a bitch.
Where the hell did you come from, Joe? Get out of here. Now, according to the survey, consumers are expecting higher prices in the near future, with median inflation expectations rising to 3.3% over a 1-year horizon. So, this pretty much means that your morning coffee may soon cost as much as your gym membership. But don't worry, there's a silver lining, I guess. Now, expectations at the 3-year horizon are slightly down to 2.8%, which means things might calm down just a little bit. However, if we're talking about long-run expectations of inflation, it's ticked up to 2.8% over a 5-year horizon. So maybe don't sell your kidney for Bitcoin quite yet. Now, for all you real estate enthusiasts out there, home price growth expectations have jumped to 3.3%, which is the highest since July of 2022. So for all of those of you who are thinking about buying or selling a home, it's pretty much like the most intense roller coaster ride right now for you. Hang on tight. This all means higher prices, more competition, and probably a lot more stress. But at least your Zillow browsing will be a little more exciting. Sounds awesome, right? All right, next up, let's talk commodities. So consumers are predicting price hikes across the board. Gas prices expect to go up 4.8%. So maybe it's time to consider the electric scooter. I actually have a couple of those suckers. I got them for my kids, but I ride them all the time. They're pretty cool. They go like 15 miles an hour, and they last quite a while. So not a bad alternative there. So food prices are also set to rise 5.3%. So your avocado toast habit might soon require a small loan. Medical care costs are skyrocketing at 8.7%. College education at 9%. And rent at a jaw-dropping 9.1%. Yikes. Basically, everything is going up besides our patience. I feel like this whole situation is similar to being stuck in a 12 by 12 room with 13 crying toddlers. Painful. So let's leave that side of things and let's go to the labor market, where the survey kind of gives us a mixed bag here. So median earnings growth has dipped slightly to 2.7%. So maybe hold off on buying that third yacht, Mr. Richie Rich. There's an increased probability that the unemployment rate will be higher in 1 year, jumping from 36.2% to 37.2%. But hey, there is a bit of good news here. The probability of job loss in the next 12 months has decreased. So you can still keep your job, but maybe just don't get too comfortable. Joe, are they going to keep their jobs?
68 times, 68 hours. 68 times, more than 68 hours.
You heard the man. We're all screwed. Now, on the household financial front, expected income growth has dipped from 3.1 to 3.0%. Meanwhile, expectations for household spending growth have edged up from 5.0% to 5.2%. This suggests that while your income might be taking a little nap, your expenses are partying all night long. Awesome. Time to tighten those belts or go start a GoFundMe for your grocery bills. Now, consumers are also expressing concerns about taxes, with the median expected increase in taxes at the current income level to rise to 4.3%. Meanwhile, expectations regarding government debt have remained unchanged at a high 9.6%. So we're all worried about taxes and debt, but at least we're staying consistent. When it comes to interest rates and the stock market, there's an increased probability of higher rates on savings in 12 months. But before you celebrate, expectations for higher U.S. stock prices in the same period have slightly decreased. It's kind of like expecting a bonus and then finding out that the bonus is made of Monopoly money. Overall, this survey paints a complex picture of consumer expectations, highlighting concerns about inflation, rising home and commodity prices, and various other economic factors. At the same time, it shows evolving sentiments about the labor market, taxes, and financial prospects. I think it's pretty clear that American consumers are preparing for significant changes and challenges ahead, which is no surprise. So stay informed, buckle up, and make sure you keep a stash of chocolate for these tough days ahead. We will keep you updated on all the latest economic news and data going on. So make sure you hit that subscribe button, place a comment, let us know what you think. We always love to hear from you. And remember, we're all kind of in this roller coaster together, right? It's everyone's in the same ride. So hopefully that at least gives you a little bit of comfort with all this stuff going on. Again, comment, subscribe. Talk to you soon.